AK Prabhakar from IDBI Capital joins in to share all the insights you as traders and investors need in the current market scenario, which has been very, very volatile. Today, of course, Mr. Prabhakar, it has been a very weak start for this entire week as well. After a 4-day hiatus, a 4-day market holiday, the markets have opened with a sharp crash and downtick of 1,172 odd points on the Sensex. And when you talk about the broader markets also, they have reflected the similar kind of move. Sectors, including IT and banking, have seen maximum kind of fall in today's trading session. How are you reading this current sentiment? Of course, the markets have taken this slide to the 4th consecutive day. Is there more pain for the markets ahead?
Yeah, I feel so. No, we have been correcting for quite some time. We are unable to move higher. We are not able to cross 18,000. So there can be some correction. Last time also we said that it is to be stock specific is better or sector specific is better than being market specific. We don't know what is likely to happen to the market. But there are supply chain issue due to China's lockdown, and that is impacting global markets, and it will impact India also in a very big way. So we need to be stock specific. We cannot be looking at the overall market. I think overall market there can be a correction. Any meaningful correction is a very good opportunity to buy. But at this point of time, it looks so that we are headed to a reasonable correction. If we continue for 1 or 2 days more, then people will try to protect their capital. They might exit weaker stock.
Okay, there could be some more pain ahead for the markets because we are seeing global markets also getting affected with the China lockdown and the concerns on the supply chain issues as well. That is going to be an extremely key to watch. But as a strategy, as Mr. Prabhakar pointed out, it is going to be very, very stock-specific market in this current scenario as well. I wanted to share with you, first of all, about the IT space, and I wanted to talk a little bit on that because we've seen the IT index down almost 4.5%, very, very sharp decline coming in. And remember, sir, we've been seeing that IT sector has been an outperformer in the last 1 or 2 odd years. And now is the time that they have been underperforming despite the decent earnings that have been coming about. But we have seen a very, very sharp correction on Infosys, especially today after the earnings, which perhaps did not meet the estimates right there. How are you looking at the fall on Infosys? And is there an opportunity for investors who are looking for a long-term buy into the IT space, into Infosys and other stocks?
Yeah, no, see, IT has a unique problem. Their business and their growth is not going to go away. But, the employee churning, it is at 27.7%, if I'm right, for Infosys.
Yes.
That is too high, it is very elevated level, and due to which their margin pressure will be there. So, we are positive on Infosys, but we need to wait, maybe another 1 or 2 months it might take for this sector, because there was 2 years of outperformance where the valuation has become too lofty. So I think any meaningful correction would be a good opportunity to buy. But if you want to be 2-3 years investor, then I think better do a SIP so that you get a better entry point.
Okay. In IT stocks, in case you're looking at opportunities in stocks like Infosys, then definitely at this point in time, a SIP strategy will be better rather than going in at this point in time. But as there could be some more pain after a reasonable outperformance that we've seen from the IT stocks over the past 2 years. But which theme or sector are you bullish on in this current volatile environment of markets, sir? Where do you see value emerging for all the investors to look at?
In the last 2 years, one sector which has been beaten down has been life insurance. Now, private life insurance has not performed. The reason being COVID claims has been too heavy. And now, India is, most of the people are vaccinated. The COVID claims have reduced. I think, the top 3 companies in that sector will perform. Pecking order would be HDFC Life, SBI Life, then ICICI Pru Life. ICICI Pru Life came with the results in the weekend, and they reported a fantastic results. If you see the growth was very good. Profit, yes, it was hit due to the COVID claims, but 4th quarter results was amazing. So going forward, I think this is one sector where the results is going to pick up, the growth is likely to pick up, and this is where investors should be there. Traders, it is very difficult. But I think if market stabilizes, then life insurance will be one sector which will give short-term returns also, short to medium-term returns also.
Okay, could you also share some targets for your favorite stocks from this space, sir?
HDFC Life, I think 22% upside is possible. SBI Life, I think all-time high is possible in next 6 to 8 months.
Okay, SBI Life, HDFC Life, life insurance space clearly buzzing, and that may be a sector that value may unfold over the coming months and years as well. So this is something that all the investors looking for opportunities in the current downturn of the markets can actually look at. Thank you very much, Mr. Prabhakar, for sharing your time with us. Always a pleasure having you with us and seeking insights on the markets.
Thank you.